What's good, everyone? Welcome back to day 3 of the series. Today, we're going to be talking about liquidity. This is one of the most important things in trading, and I have a feeling that this is where it's going to start making a lot more sense. And without a draw on liquidity, as I'll talk about and explain what that is, your trading is useless. Like, you need to be trading towards a draw on liquidity. So all liquidity is where orders need to be filled in the market, and that part doesn't really matter. But what matters is being able to identify the high probability draw on liquidity for the day. And all that means is the the magnet of in the market where price wants to go for the day. So I'm going to say that again. It's a draw on liquidity that is high probability is a strong magnet for price to be attracted towards, and that is where price will want to go for the day. So we need to be able to identify the high probability draw on liquidity for the day so we could have something to target. Without a target or a magnet in the market, you're trading randomly. You don't really know where price is going to go. And this is the key thing in my model. So let's get into it. I'm going to be showing you guys a bunch of in-chart examples. But before that, let's take a look at what this looks like not on a chart, right? So I'm going to just type out some high probability draws on liquidity, also referred to as DOLs. So what are some high probability draws on liquidity? The first one, I would write this down also, is going to be called a 4-hour untapped fair value gap. All right, I'm realizing now that this is probably going to have to be day 4 because you guys don't know what fair value gaps are, but I'm just going to keep rolling with it, so you guys probably won't even see this posted on day 3. So number 1 is a 4-hour untapped fair value gap. I also like to target big wicks on the higher time frame, right? Number 3 is going to be all-time high. These are in no particular order, right? These are all high probability. So they're all great magnets in the market. And this is insane sauce just from me watching the markets over time. So I definitely, again, take notes on this because this could take your trading to the next level for sure. Once I started prioritizing high probability draws on liquidity, my trading flipped and took a huge turn, and I started making a lot more money. What else do I like? 4-hour and 1 hour untapped fair value gaps, big wicks on the higher time frame, all-time highs, weekly gaps, right? Daily gaps. This one, new week opening gap / new day opening gap. These are the main ones that are really freaking good. So write those down. So now I'm just going to go into the chart and show you guys what each one of these looks like so you could be able to identify them. All right, so if we go to the 1 hour chart here, right? What do these look like? All right, give me a second. I'm cooking food here, so I'll be back. Okay. So let's start identifying some of these, right? So the first one on the list is a 4 hour, 1 hour, weekly, daily, untapped fair value gaps, right? So we're on the 1 hour chart here, right? So what would this look like on the chart? So I'm seeing right now, um, I'm gonna mark out the fair value gap, right? So you guys should be able to see how this is a fair value gap right here. This is also a fair value gap right there. But as you can see, this gap was already tapped into, so that's not untapped, right? Previously, when price was up here, it was untapped. But now that we've tapped it, we can't target that anymore. So this is an untapped 1 hour fair value gap. So this is a great draw on liquidity. So what I would do is, if I see this, I would mark it out, and this is an extremely good target in the market. So I would most likely want to short off. Not most likely, I would try and catch a short position to this draw on liquidity because it's a super strong target. This is where price is going to want to fill this gap at some time. And when we get into the entry model, if an entry appears and there's a good draw on liquidity, then that's what you enter on ultimately. So let's just look at more of these, right? That's an untapped 1 hour gap, right? Let's go to the 4 hour chart. Okay, so as you can see, this is a fair value gap here, right? From this candle body, from this wick to this wick, you should be able to see that that is a fair value gap, right? If you can't see that, you definitely need to go back and refresh your memory on the fair value gap videos. You should be able to identify those like this. As you can see, it already got tapped into though. So we wouldn't be able to use that as a target. Let me try and find one, like an untapped 4 hour. I mean, we continue to fill these 4 hours. So like, here's an example, right? This is when price started ripping. This is an untapped, this is a fair value gap. And look, it didn't get tapped into. So at some point, we can target this when price decides to return all the way down here, which might not happen in years, but that would be an untapped 4 hour. So you would mark that out if you see this in the day, and mark it out with the horizontal line. And this is a magnet in the market. So we would look to take an entry towards that, but you guys don't really know about the entry system yet, so I'm going to skip that part. Obviously that's going to be in the later video, so let's just move on and talk about more magnets in the market. Big wicks on the higher time frame. This is a good one for sure. So look at this, right? This is just proof. So I'm going to move this over a little bit. But look, this is a wick, right? What in this range, in this entire range right here, which wicks stand out to you the most? You would probably say that, I'm going to circle them. This wick is freaking huge and it's standing out to you, right? It's the biggest one on the screen. That is a great draw on liquidity. So what would I do? I would mark this out, and that's a great magnet in the market. Price is going to want to visit that area. So awesome magnet in the market. Another nice wick right here, right? This wick right here. So coming into the day, if you see that, you would want to mark that out with your horizontal line. And that's a great magnet in the market also for possibly shorts, right? All-time high, all that means is, look, at the moment we're at all-time highs. So that's the highest high put in the market at the time, right? So right now it's this high right here. So that's all-time high. That's a really good magnet in the market. Previously, right, if we scroll to the left here, at this point, this big wick was the all-time high. And it's a huge wick, and look what happened. We wanted to take that out. So weekly gaps, let's go into the weekly, right? This doesn't happen too often because it's the week, right? But okay, there's a lot of shit on my screen right now. This is a fair value gap on the weekly time frame right here, from that wick to this wick in between the candle body. This is the weekly fair value gap, and it's not untapped anymore, but previously it was untapped. And what would you do? You would mark out the top of it and possibly target shorts. Look for shorts to this untapped weekly gap. New week opening gap, new day opening gap. Okay, so let's get into that one. Also really good, strong target in the market. So every week there's a new week opening gap, right? So as you can see here, let's go to the hourly. So you see how this is Friday. This is the hourly time frame. This was Friday. Market's closed. When the market opens on Sunday for Asia session, we leave a gap. This is a great target in the market, right? It kind of looks like just a gap in the screen. What would you do? You could mark it out, right? It looks like you could use the box tool to mark it out. This is a great target in the market right here, this gap. So what could we possibly look for in the future when you learn the entry model? Shorts, right? Selling to this new week opening gap. This is a super strong target, and I'm going to continue to say this. If you're not trading to a strong target, you're screwed, right? Make it the highest probability to always want to have a strong target that you're trading to. And if there's not a strong target on the day, then you most likely want to sit out of the day, right? So that is the new week opening gap. So price is going to fill this at some point, right? We're very far from it now, but if you saw this and it was close, you want to mark it out, right? What else? Let's see. Where'd my text go? It's on the weekly. Okay. So we went through a lot of these high probability draws in liquidity on the chart. I would want you guys to mark these out. Type in the comments if you're able to send pictures in the comments, or DM me, ask questions. I want you to mark out for your homework, mark out 5 big wicks on the higher time frame, right? Previous all-time highs, or if we're at an all-time high right now, mark those out and journal that. New week opening gap, new day opening gap. I showed you what that looks like. It's the gap in the market. Go on the hourly time frame and mark that out. Journal it. Untapped fair value gaps. Find those. Go back and see previous gaps that were untapped at a certain point, and look, they most likely got filled for sure because they're just strong magnets. So once you're able to identify these, this is your number one framework for the model. This is my number one framework for the model. Draw on liquidity is key. It's gold. If you're trading, you need to be trading towards a draw on liquidity if you want to make any money. It's a target in the market. If you don't have a strong target, you don't know, the probabilities are not going to play in your favor. So do that for homework, journal that. And yeah, I just want to talk a little bit more about like the importance of identifying these pre-market and if they're not visible, then most likely you want to sit out of the day. If there's not a strong target for the day, hop off the charts. Usually there is, and what you need to do is right when you hop on the charts, mark those out. And when we get into the entry model, I'll explain how you can take an entry towards those draws on liquidity. But the main thing to take away from this video is prioritize the number one thing. Draw on liquidity is the number one thing to become successful. And if you can identify these cleanly and not take any bullshit, draws on liquidity, this is the only thing that you need to put in your head. These are the only targets in the market. If they're not there, or if their setup doesn't appear towards these draws on liquidity, then no trade, right? If you could follow that, you're gonna get rich. I mean, so that's about it for today's video. Do the homework, journal a bunch of these, send me questions. If anything was unclear in this video, tell me for sure. Ask questions, send pictures, DM, Snapchat, text, whatever, if you have my contact, whatever, in the comments. So yeah, that's your on liquidity. See you guys in the next video. Peace.